Hello, everyone. I hope that you had a wonderful week so far. There hasn't been much high probability this week, right? To be honest, right, this is a week whereas I can say, truthfully, that I have not pressed a button, right? I have not placed a trade all week. I have not, right? And the reason for that, we'll get into that. And of course, firstly, it's mostly due to the fact that we do not have anything to work with, right? We don't have any high impact news events, right? So today's Wednesday, and you can see that right today we had no high probability price action at all, right? And tomorrow, right, I don't expect things to be much different, right? We will see a lot of fireworks, right? Next week. Next week is CPI, right? So this is as, normal as, you would like to see week one, right? Not as normal, but this is as abnormal as you would see week one. I don't think that we will see a week one or a Q1 of the month like this one, for a very long time, years, probably, right? And you can see there's no news events. That's already a sign that the week is going to be a low probability. And next week we have CPI clustered, in the middle of two high impact news event days, which indicates that, we're going to have a lot of volatility next week. It would either be chaos or joy for some people. So here, right, this is the first thing I want you guys to look at, right? This is the 4-hour chart. And you guys can see that we had, right before market close, the US dollar just, dropped, just dumped. The euro did nothing. And the British pound did nothing at all, right? So here we have two out of the three members of the FX triad just completely doing different things. You do not want to see this at all, right? You don't want to see this. What is what would get you to do something, say tomorrow? You need to see price align. You need to see price doing what it's supposed to do. You need to see the US dollar going up and the euro going up with the pound, right? Right now you can see that the pound is, just looks terrible. Why is this? What caused this? There has been a lot of turmoil happening with the government of, Great Britain, England, whatever you guys call it, whatever it is, really, right? And, there's a lot of losing, there's a lot of violence going over there right now. The government is I've heard that it's corrupt, which, was done on purpose, of course. Also, right, it's just chaos over there, right? And that is why you see the British pound just trading like just a shitcoin. That's the best way that I could, describe it. You literally have the British pound doing the opposite of what the euro is doing, right? While you have the US dollar expanding and the euro just consolidating. It just doesn't make any sense. It's not supposed to make any sense. It's supposed to confuse you. It's supposed to, allow you to forget the things that you already know, to not trust the things that have been working for you for months on end. That's why they're doing this. They know. Right, and that's just as much as I'll say. I don't want to like sound like a conspiracy theorist or anything. Right, I'm not. Right, but this is just the truth. Nothing here makes sense. And all of this is happening, right before what? The US presidential elections. Right? All of this is happening before that. Right? And this particular quarter of the 16-year cycle, which is something that we'll touch on, right? It's prone to, give us these developments that we see in price action. So here, right, and you guys remember the last time that we talked about the index futures tried, like what we actually wanted to see. So yeah, first of all, yeah, price has been, tipping towards, what we want, but, still, this is not the best price action. You have most of the move already happened, which just happened, without warning, right? Which was insane. And I said 16-year cycle, not 60, right? For anyone that is confused. Anyways, here, right? The S&P 500, you can see that we, just wicked up at the area, which we hinted at, and then it just fell back down. Same thing for the NASDAQ and the same thing for the Dow. So first of all, I want to draw your attention to here where I have marked as sell side liquidity for the Dow. And, here, more than likely too as well. What does that mean? It's not like me being, secretive or anything. It's literally me just saying that I expect price to be drawn to this level. I expect price to go to this level, right? 38.50, 38,590. Yeah, for the Dow. And of course, we expect, this low just, has to be taken, in my opinion. So there is a lot of, news going around, financial news, of course. I saw something on CNBC, literally around, 2 to 3 hours ago. Whereas, it started with, just bullish views on the market, bullish views on Bitcoin. It's time to buy the dip. And when I see things like that, I don't even care if, that's true, which, there is a 75% chance, which, I have these stats, that they're just trying to trick you, trying to trick us, right? They're just trying to, get us on the wrong side of the market. Sometimes, rarely, it seems as if they're correct, right? But they just have to do that sometimes, right? But most of the times they're wrong, right? And there's also, and I don't even know if I should call this a cracking correlation or anything, but whereas you have, two people which are, quote unquote big in the industry that just seem to oppose one another, right? Usually, right? Price usually, gives bad price action whenever such things happen. So whenever you see someone like, Jim Cramer being bullish, or, let's just say like right now, what's happening right now, Jim Cramer just trying to say that he's bearish, right? Then you have CNBC be bullish. That's bearish. Or you have CNBC being bearish and Jim Cramer being bearish at the same time, then that's clear. That's clean. Right? Price is going to go in the opposite of whatever they say. Price is going to do the opposite of what the headlines want to happen, or whatever the headlines, are trying to get you to do, or get you to believe would happen. So here, right? For me, it's easy, right? Just relax and chill. Like personally, waiting for tomorrow to see, what happens. Not really interested at all, in this type of price action right now, right? But, if we get a higher low swept, then I will look for sequential SMT, a precision swing point, and it will be easy from there. If not, then we do nothing, right? If nothing happens until, even next week, right? CPI, which will totally be, insane. It will be crazy. I'm actually looking forward to see what happens next week, which is, the second week of the month, which gives us the most volatility as we know. And already we've had a lot of volatility. So here, right, this is like the most important thing, right, of this entire lecture, right? So right now, what you see on the screen right now is a cracking correlation between the 16-year cycle. What's the 16-year cycle? So the 16-year cycle, right? It's basically just the years of the congenial cycles, right? Just times 4. So the previous 16-year cycles quarter, it was from 2019 to 2022. The current 16-year cycles quarter, it ranges from 2023 to 2026, right? So each double of quarter, right, there is, that's one of the, within the quadrennial cycle now. I don't want to get anyone confused, right? Now I'm talking about the quadrennial cycle, not the 16-year cycle, right? So each, double number, like, or even number, such as, 2024, 2026, those years, will give you the most volatility, those years. And why is that? Because it's election year, right? It's either, the presidential election or the midterm election. The presidential election is always Q2 of the quadrennial cycle, which is comprised of 4 years, right? So the thing about the 16-year cycles are that they give the market, a reason to move. They tell the market to move, right? They create what? A lot of drama. So literally for 4 years, you will see consolidation. And then for the next 4 years, you'll see price going up. Or for the next, 4 years, you will see price reverse. Right? So again, and you can do the math with this, go back and check, on the 16-year cycle, right? So the first one that I'm going to give you right now is what? 2019, 2022. The current one was what? 2023. And when will the current cycle end? For the 16-year cycle, when will it end? 2026, right? So here, this is the high of the previous 16-year cycles high, right? Currently, this is the high of the current one, right? And we saw sequential SMT here, right? Bitcoin traded here. When this candle was, in formation, like when it traded above this high, we highlighted here. And then, within, and we also talked about this a lot, I believe a few months ago, in regards to Ethereum, and the, what? 1 second. Who's calling me? Oh yeah, sorry about that. And we talked about the possibility of a pullback right here, which, I think that this is nothing, to be honest. I see people being scared. I see people just, just being people, emotional. I don't think this is anything, to be honest, right? And that's just due to the fact that, I view price like this, right? I don't look at here, right? I just look here, right? I don't look at, which means I don't look at price. I just look at time. So just imagine that this is just, just quarters, and it's quarterly theory, right? You don't care about how high price is. You're just looking at, quarterly theory, right? Price traded here, stopped here. You're supposed to be bearish here, so you aren't supposed to be buying here, and that's the reason why I was always saying that you shouldn't be interested in buying Bitcoin here, because we have this higher time frame sequential SMT, right? Before dropping, right? It would be nice to see a lower time frame sequential SMT here, which does not always happen when you are, when you're looking at, the higher time frame sequential SMT, such as the 16-year cycle sequential SMT, right? It by itself, it incites bearishness. It will, just create a large inflow of liquidity for the market. So here, right, you can see that we had two swing highs here, in close proximity, right? So this swing high before this down leg right here before price dropped, and now we're looking at Ethereum, right? It was broken. This one wasn't. Here we had price break both of them, which is something that you would expect to happen before a major reversal, right? So on this candle right here, which is that candle right there in Ethereum, so you guys can see the respective candles, right? That candle in Ethereum, what happened? That monthly candle. That was February of this year. It did not break, that high, which was the second swing high before price dropped, which was the failure swing before price dropped. But in Bitcoin, it did, and it went really close here, right? After that, we had this candle right here, trade above here. We broke above this candle right here, but we didn't break this one, right? Then what happened here? We consolidated. Here we had a precision candle form, right? This is a down close candle. This is an up close candle, right? Then we just had price breakdown, right? It just dropped. Literally just dropped. We got the news about what happened in Japan. Japan's stock market crashed insanely. You can Google it if you need these specifics, if you don't know about it already, right? And of course, we have things heating up in the Middle East for real, right? It's always heated up, right? They have completely made us desensitize us just, about the war that's happening. Terrible things are happening, but we're just used to it. And this is, just a part of their strategy to just, control everything. Right? So at a certain point, right, of course, they use fear to control us. Everyone knows that. But yeah, I'll just not go any deeper into that, right? So yes, I believe that price will be drawn to here. It doesn't matter what happens here, right? I don't care about buying right now. It doesn't matter. Price is not going to just go to 100K from here for Bitcoin. That's not going to happen. $100,000. I don't think that will happen, right? I don't think Ethereum is going to just explode and go to $10,000 like that. I don't think that would happen. That would be too easy. Sweep the lows, and then we'll talk, right? But of course, right, we'll see a lot of back and forth, a lot of fluctuations, right? Even here, we could see sequential SMT still here within this range of price action, right? But, when it comes to investing, holding, right, for the next 4 years, I don't see that here. And here, right, we just have a chart of the S&P 500 here and NASDAQ right here. So as you guys remember, right, when price was, right here, and we'll talk about why we'll talk about, this right now. Price extended, and while price was extending higher from around this candle, we were, bearish, like right here. But what happened here, which allowed us to, get out of tune, and, there was a higher movement of price before it fell down, even though we wanted to see price drop down. And then here again, right, we want to see a sweep before it dropped, but then it just dropped, right? We're going to look at the reasons for that, the shocking correlations between movements during a specific time frame. So here, these blue dots, right, from this one to this one, it represents symmetrical price action. Symmetrical price action within the US dollar, between the US dollar and the NASDAQ, occurs whenever you have price moving in the opposite direction between those assets. So, for symmetrical price action between the US dollar and the European pound, the euro and the pound is the same thing as what would happen here. But between the NASDAQ and the S&P 500, symmetrical price action occurs whenever price is moving in the same direction, right? We all know that. Here, right, you can see that we had price dropping here. Here we had price extending. That's symmetrical, right here. And this is another type of symmetrical price action, which I'm pretty sure you don't really take into consideration, or you just completely don't pay attention to, right? We have price extending here, right, from this low to this high right here. What happened when price is extending from this low to this high? We had price just in a close range, right, with it right here for the NASDAQ, right? So and you guys remember that, we talked about all of this right here, price going higher and higher and higher, right? Also here as well, and here again, going higher. But we wanted to see price sell here, but it went a bit higher before it dropped. So yeah, usually whenever you see a asset, right, which opposes another asset, consolidating while the other one is extended, you will usually get the asset which is already extending to, just continue higher. And then this breakout will happen opposing what's happening here. So again, we had this extended, but here we had the NASDAQ consolidated. They should be moving the opposite direction and doing completely different things, right? Whenever we have one of the assets which oppose the other one, consolidating while that one is extending, we do not see that as, doing different things. We just see that, price here is accumulating orders. It's waiting for a manipulation leg. Then it's going to go higher, right? So here, we had price go higher. Then here, for the US dollar, right, it went higher. And while price broke out of this range, it dropped lower, right? Doing what it's supposed to do, right? It should be dropping lower while the US dollar is going higher, or it should be consolidated, right? And this is one of the reasons why, you usually see the NASDAQ going higher and higher and higher, or lower and lower and lower, while you have the US dollar, just seemingly being range bound. Because at times the US dollar too will consolidate while NASDAQ will just expand. Or it will consolidate while NASDAQ falls. Here again, right? We see here where I have this blue dot, price dropping. And here again, what happened? Price extended for the NASDAQ. It just expanded higher. Here we had price just pull back completely, right? And the same thing happened here for the US dollar, right? Which ended this expansion leg. So we had both of them consolidating right here and actually mirroring one another, which is something that should never happen. Price dropped here, price dropped here, expanded with the US dollar, right? So right here is when all of the mess that's happening within the market started, right? With this expansion, like this is when all of the low probability price action started. Price expanded, then it started to drop, right? Just here, expanded, start to drop. And that's what's happening now. What do you want to see next? We want to see consolidation. We want to see tight range price action. And that will, give us a sign that we have, highly tradable moves upcoming or, expansions. I hope that you found this useful. And we will be here back. Let me see. We'll be here back either Sunday if, the Fed decides to have an emergency, meeting Monday, which they could. Or it will be Monday at 6 p.m. Eastern Standard Time. So, watch the economic calendar. That's how you know if I'm going to go live Sunday or Monday. Because if there's no news on Monday, then it doesn't make sense to do anything then. With that being said, good luck, good trading.